use the Q&A function on screen, and at the end of the presentation, we'll put your questions directly to the presenter. This session is all about listening and learning and looking for opportunities. So let's get started. Our first presenter is Gary Rohloff, Managing Director of Laybuy, ASX code LBY, which has a market cap of $13.9 million. Laybuy is a fast-growing BNPL provider with a market-leading position in New Zealand and the United Kingdom and a growing presence in Australia. Gary, over to you.
Hi, David. Thanks very much for having me, and Happy New Year, everybody. I hope you have had a great festive season. Look, what I thought I'd do is just run you through the Q2 results that we presented to the market back in November and give you a little bit of an update as best I can through the continuous disclosure regime of how things have tracked through Q3, because we have our 4C announcement due at the end of this month. So if we could just skip through the disclaimer slide, please, David, and we'll go straight to the highlights. And I guess the one I'm really keen to emphasize here is the improvement in our income, up 28% quarter on quarter, or around $3 million from Q1, and somewhere close to up $4 million on the quarter of Q2 FY22, up some 34%. So really strong income growth that we are experiencing and continuing to experience. As we mentioned, with our net transaction margin improving 260 basis points to 4%, we considered that a peak at 4%. We think our NTM will settle somewhere between 3 and 4%, and that is consistent with what we are seeing in the Q3 numbers that we're reviewing right now. I think a couple of really important numbers yet to cover off here. Obviously, our EBITDA improving by 270 basis points to a small negative 1.3%, and our gross losses improving markedly, down 130 basis points to 1.5%. I'm going to spend a little bit of time on the UK defaults in a subsequent slide, but you can see the significant improvement in the UK, our growth engine, with default rates down a big 277 basis points. Why is GMV per customer important to us at 14% improvement? It's because we have stepped away from the vanity metrics of active consumers and active merchants. We are after quality, and that is quality in the consumer book that we operate and quality in the merchants that we onboard. And I'll talk a little bit more about that shortly. Can we just go to the next slide, please, David? Our strategy on achieving profitability has been unchanged for the last 12 months and all about 3 key pillars. Saving to invest, which is largely self-explanatory. Any savings that we are making in the company through improved operational process or procedure, and of course the tough decisions we had to make in July to downsize our team, have been invested back into the business to make our platform provide a better service for our consumers and our merchants. As I alluded on the previous slide, this is all about us increasing the quality of our customers and our merchants. What do I mean by that? Well, you will see in some subsequent slides, we have intentionally removed thousands of bad acting consumers from our platform, and similarly hundreds of merchants that we have identified as bad actors as well. That means we are trading on a GMV that is richer in terms of NTM and revenue than previously, hence the numbers you saw before. The final pillar in our strategy is all around the reduction in fraudulent activity and credit risk, credit loss. We have invested a lot of money in people and processes, and we continue to invest in systems, and you'll see the evidence of those efforts in some subsequent slides. Next one, please. So here's a few key metrics that we'll run through. If we just go to the next slide, thanks. So as I said, very strong growth in income, as you can see, up 3.2 million on Q1 and up almost 4 million on Q2 FY22. Our quarterly NTM has had a massive improvement, and as I say, peaking at 4% in our view. And importantly, that operating EBITDA, both in dollar terms and as a percentage of GMV is showing very marked improvement. We go to our next slide. This is where I'd like to spend a little bit of time, because one of the key drivers of improved NTM, of course, is that improvement in default rate. And as you can see, our group defaults have fallen from a peak of 4.57% to 2.05%. More importantly, by region, you can see how we have rapidly and significantly got our default rate in the UK under control. It was worrying at that point of 6.06, as you might appreciate, but certainly at 2.39%, a massive improvement, and we are continuing to see that improving trend over the course of the last 3 months. New Zealand and Australia has never been a major issue for us in terms of defaults. A little bit of an increase there, which we are putting down to the macroeconomic situation that all consumers are feeling right now with the cost of living increases. Our orders per active customer in the UK are significantly higher than those in Australasia, and that is down to the fact that we have an affiliate program in the UK that provides access for our consumers to the top 500 UK retailers. As I've alluded, GMV per customer is up 270 basis points, which is a very big increase year on year. Go to the next slide. Just showing you where we're stabilizing our GMV. As I said, we are not about focusing on what I do term vanity metrics, which is active customers and active merchants. The simple fact is, last year when we were being encouraged by the market to grow at any cost, active customers was a key metric the market was looking at. Active customers are defined as those who have shopped in the last 12 months. We knew going into Q3 that we had attracted a lot of bad actors prior to Christmas 2021. That would drop off our database because they only shopped once, they were defaulters or fraudulent actors, and we've wiped them off our platform. So I'm not at all concerned about where we're tracking in terms of active customers, active merchants. My focus is all about quality GMV. If we go to the next slide, please. And as you can see in the United Kingdom, our UK GMV per customer continues on the trajectory that we have been looking for, and we're very happy with how we're performing in the UK. As I alluded, Q3 of FY22, prior to Christmas last year, we onboarded a massive amount of bad actors, which drove that £87 million in that quarter. We had every expectation of that being lower this year, and as a result, fewer active customers, because a large portion of that 87 million were bad actors. We go on to the next slide, please. Same goes for Australia and New Zealand. In New Zealand, in Q3 last year, Auckland, our largest city and largest catchment, was still in lockdown. So we gained the benefit of that COVID increase through October, November, and December. That obviously wasn't the same this year, but Q2 was still a solid quarter for us across both those jurisdictions. And again, our GMV per customer is continuing to track where we want it to. Next slide, please. Supporting us, we have two very good partners providing the debt support for our debtors ledger. Partners for Growth have been a fantastic support for us in the UK and continue to provide that support as we work in that UK market and look to grow further with a quality book. Similarly, Kiwi Bank here in New Zealand, long supporters of Laybuy, have been with us since 2017 and have been a terrific support for myself, the board, and the management team. So we're very blessed with the partners we have on our debt facilities, and I can't speak highly enough of them. Go to our next slide, please. Next one, thanks. So look, from an outlook perspective, nothing much has changed in terms of where we're at today than where we were back in November. We're reaffirming our commitment to achieving profitability by the end of this financial year. We had a small positive EBITDA that we achieved in September, and we have had a very solid performance over the course of Q3. More to come on that, obviously, with our 4C announcement. As I mentioned, our NTM we expect to normalise between 3 and 4%. The Q2 performance was a peak. I don't expect NTM to be at 4% for Q3. I don't expect it to be below 3 either, but all I'm saying is 4 was a peak. Those anticipated savings of $20 million as a result of what we've been doing through our restructure have been invested back into the business, and they are supporting that pathway to profitability. What I would highlight that we alluded to back in November is that we do see the inevitable post-Christmas hangover kicking in already in January across all 3 markets. That is seasonal, that is anticipated. And I think when you consider the hangover from Christmas on top of the general malaise in the economies around the world, that is not unexpected at all to see the softer GMV numbers. And having said that, we don't expect that to impact our profitability adversely at all. We have continued our tight approach to credit risk when we go through our onboarding of consumers, very mindful of that macroeconomic area. And as I say, we do have an expectation that we'll be profitable and self-sustaining by the end of our 2023 financial year. So look, I'm very happy to take any questions you may have. David, I'll pass the mic back to you.
Gary, thanks. And a great presentation. And not a pivot's the wrong word, but you've clearly taken some very strong and proactive steps in reshaping the business and aligning the business to profitability, and in some respects decoupled a little bit from what the market expected of you or expects of you from a growth point of view, and looked at a sustainable model that will drive the business profitably and successfully going forward. The question just in terms of profit, so you've obviously put the number out there saying that you believe you'll be there by year end. Is that are you comfortable that you're tracking towards that goal?
Yeah. Yes, I am. Yeah.
And when you get there, the initiatives that you've used to get yourself to profitability, do those initiatives start to lessen a little, or do they just ramp up or stay the same?
They actually ramp up, David, because we've got a couple of new things we'll be rolling out over the course of this calendar year that will actually enhance our profitability. We've also exited a couple of areas of the business that were not delivering on any sort of ROI that we wanted. I can't articulate that at this point because we need to run that through the normal channels as an ASX listed business. But the improvements that we are seeing are definitely sustainable and in fact are improving.
And in terms of the buy now, pay later sector has clearly seen changes, and some companies have just dropped away because they haven't taken that proactive stance. How do you think the sector looks in 3, 6, 12 months from here, or even longer?
Oh, look, I think the sector is providing a service that consumers are embracing globally. And sometimes down this part of the world, we could become somewhat shielded from the fact that in the Northern Hemisphere, buy now, pay later remains in its relative infancy. So I think there's a lot of runway left there yet. You know, we at Laybuy have sustained our performance in the UK, have continued to grow in the UK. We've watched some other participants choose to exit that market. We're very proud to be recognised as one of the top 3 in the UK market, and we continue to have confidence in our ability to stay there. So I think buy now, pay later is here to stay as a payment method. I just think that inevitably everyone has to evolve, and we're doing that, and I have no doubt at all that our competitor set will be evolving also.
How do you see growth going forward? Obviously, you touched on in your presentation that it was a growth at all costs model, largely because that's what the market was expecting of you. And now you've reshaped to be focus on profit and sustainable profit going forward. Does that lessen your growth going forward, or does it just match it more to where the business is and sizes to where the business is at that point in time?
Yeah, David, we are still growing. We're just not in a hyper growth mode that costs you a lot of money. I have a retail background as a CEO for 16 years. I'm not used to running companies that lose money. I never have until we started this one, and it was a growth business, and the expectation was you did. We are focused on being a profitable business, a self-sustaining business, so that our requirements for capital come from our internal resources, not external.
And is that early growth, and as you said, there was a hyper growth phase there, but was that early growth surely was very important to giving you the foundation now to build your profitable business?
Oh, yes, it was. I think, we're all very wise with the benefit of hindsight, aren't we? And, we unquestionably got turbocharged through COVID. As a result of that, we grew 500% year on year in the UK from 20 to 21, and another 100% from 21 to 22. I would have liked to have seen that with the benefit of hindsight growing at, say, 200% year on year as opposed to 600 over 2 years.
Understandable. A great outlook, clearly focused on profitability, matching the company and its operations to the profitable growth that you're looking to achieve. Gary, clearly a hidden gem to watch in 2023. Thanks for your time, and we look forward to following the story.
Thank you, David, and we'll talk to you again soon. Happy New Year. Bye.
Look forward to it. Our next presenter is Mike Dunbar, Managing Director of Western Australian-focused gold, nickel and copper explorer Mamba Exploration, ASX code M24, which has a market cap of approximately $10 million. Mike, welcome, and we look forward to hearing more about the company and its recent exploration activities.
Great, thanks very much, David, and thanks for all the listeners. And I reiterate, I hope everyone had a enjoyable Christmas break and are ready for a very busy 2023. We certainly are, and we're very active and very busy in our exploration. So go through the disclaimer slide. You can read that at your discretion. Having a bit of a look, and really this is an introduction to Mamba. So we have deliberately focused on Western Australian assets when we formed the company in late 2020, and we listed in February of 2021. So we're about 2 years old. We've got a small team, but a very dedicated team working very hard on our projects. Total shares on issue is around 61 million shares. As Dave mentioned, market capitalisation around about the $10 million mark, with $2.7 million in cash at the end of Q1 of this financial year, giving an enterprise value of around about $7 million. So, we've been, as the title would suggest, a hidden gem. So moving to the next slides, really, and this is a bit of a summary of where our projects are in Western Australia, and quite deliberately, we've got summer projects in the southern part of Western Australia, which we can work during, as the name would suggest, the cricket season or the summer months. And down there we have the Hyden project, which we've recently just acquired under an option, the Darling Range project, and the Great Southern Gold project as well. So 3 projects that we can work during the summer months, and then very deliberately in the winter months, when it's difficult to work in the southern wet part of Western Australia, we move to the Kimberley and the Ashburton project up in the northern part of Western Australia. Now that part is very, very prospective, but very seasonal. And as a lot of people, I'm sure, would have seen in the news recently, the seasonal flooding that we've seen there. This flooding has been far more substantial than most years, but you do see seasonal floods and seasonal rain events in the north. So we need to keep ourselves busy with very deliberately a northern and southern exploration project style, so we can work on both areas year round and provide news flow year round. So moving through the southern projects at the moment, that's where our focus is, and the project that we acquired in November under option, which is actually a rare earth project. Its rare earths are certainly on the critical metals lists for most governments around the world at the moment, and very, very sought after and needed for the decarbonisation of the economy going forward. So looking at the project itself and the Hyden project, most people wouldn't know where Hyden is, but it's around about 300 kilometres to the east of Perth in the wheat belt of Western Australia. In the project that we acquired, we got 4 granted exploration licenses and the rare earth rights to all of those tenements. And on top of that, we pegged 100% in our own right 5 new exploration licenses around them. The areas had very, very little exploration for rare earth elements in the past. And really, the one highlight was there were only 3 samples taken and assayed for a full suite of rare earth elements to date by the vendors of the project. We identified a very, very high-grade clay sample of 46,000 plus change parts per million of total rare earths, which is incredibly high for clay-hosted mineralisation. And we now need to understand what that means. The other really interesting part about rare earths, and not that many people know much about them, they are very niche. There's a very high proportion in that drill sample of heavy rare earths, which are as the name will suggest, the heavier end of the rare earth spectrum, with around 37% of the total rare earths being heavy rare earths. Also, the NdPr accounts for around 26%. Now, NdPr is important for permanent magnets, and that equates for around about 26% of the total rare earths. So very, very interesting and high grade heavy rare earth and NdPr. Interestingly enough, this is only part of the story. The clay mineralisation we've identified is part of the story. There's also a very significant gravity anomaly that we've identified from regional data just to the east of that sampling, and that really provides another target and another style of mineralisation that we're exploring for. So going to the next slide. So why have we got grades of this kind of magnitude in the area? And the answer is we don't know. It's a bit too honest for some people, but really that's the truth. Most clay deposits are around about 800 ppm to 2000 ppm. So this at 46,000 is incredibly high. That could be one of 3 reasons could explain that. The first one, we may just have stumbled across the highest grade rare earth clay deposit globally. Now, I think the chances of that are incredibly unlikely, but that is a possibility. I don't think that's going to be the case, however. The second option to explain that high grade is there's graphite has been mapped and drilled nearby, and graphite quite often can be a sink, a metal sink, if you like, for all metals, but could be a sink for the rare earths as well. So that could explain locally why we've seen higher grade total rare earths. The other option is there may actually be a bedrock source of rare earths that are creating these very high grades. Now that's a really interesting potential and an interesting option, and that's part of the reason I mentioned the gravity anomaly, which is off to the east of the area that's been drilled. So that could be the source. Now that's a little bit unknown at this stage, and that's why we're doing the drilling at the moment. We've commenced a drill campaign there, testing the distribution of the clay mineralisation, as well as a detailed gravity survey over the gravity anomaly to the east to better understand the reason for the high grades and what is controlling them. So moving to the next slide, you can see 3 separate images here. On the left-hand side, that's the geological mapping and the drilling that our vendors that we have acquired the option from had done targeting the graphite. And you can see the graphite is in the GT in red there. And you can see the location of the gravity anomaly just to the east of that in white. The central image is a magnetic image, total magnetic intensity. And you can see again a magnetic feature running associated with that gravity anomaly. And on the right-hand side, the gravity data, regional gravity data itself. So that anomaly is around about 2.8 kilometres by 2.2 kilometres. So we need to understand that system better before we start drilling that system. That's why we're doing the gravity survey at the moment. So moving to the next slide and the next project, the Darling Range project. Now, I'm sure a lot of the viewers or listeners would have seen the discoveries and phenomenal growth that Chalice have had, discovering the Julimar deposit just outside of Perth. Well, our Darling Range project, if you go to the next slide, is around about 30 kilometres from the Julimar discovery, just outside of Perth, in the western portion of the wheat belt. Now, on the image on the right-hand side, you can see the Julimar project and the trend, Chalice's magnetic trend running through that state forest area in red. Where we are is around 30 kilometres further to the northwest, northeast rather, and we've identified a 6 kilometre long trend running through our tenement package. So moving to the next slide, and you can see a couple of images here. On the left-hand side, they've got a 6 kilometre long PGE, so platinum group element anomaly that can be traced through the farmers' paddocks. On the right-hand side, we've identified ultramafic and mafic rocks that run and follow that trend, and then on top of that, gravity anomalies as well. So really quite an interesting target. We've tested the northern one. We're yet to test. We've just got ground access to the south, and we're drilling that. Done ground EM. That modelling is now underway, and drilling is scheduled for this month as well. So we're very active on that area. Very quickly moving to the Great Southern project, our third of our summer projects. Funnily enough, is in the Great Southern. That's the geological map, and you can see in that area a 4 kilometre long trend. We've been focused on drilling on an area just in the southern prospect, and there's an image there. If you click to the next, just move forward a little bit, just in that box there, is the drilling that we completed in November of last year. Excuse me, that drilling has been completed, and we're now waiting for assays. But just zooming on that area in particular, that's a 4 kilometre long trend running through that area. I'll just click forward a little bit. So there's a 4 kilometre long soil anomaly. We've soil sampled that, got up to 2.8 grams per tonne, and a lot of other high grades in soils. We've only drilled a very small portion of the southern part of that. 32 holes drilled early last year, and excuse me, and a lot of mineralisation identified, very shallow as well. So next slide. You can see that drilling, very shallow drilling to the north. Moving forward up to our winter projects, so the Kimberley project, I'll only talk about Copper Flats. It's a large tenement package running from the Northern Territory border off to near Halls Creek. Next slide. It's a very large tenement package, as I mentioned, and really we're exploring and focusing just on the right-hand side there on the eastern part of that area to the northeast. Next slide. So we've got a number of separate targets for mineralisation in the area. The surface sampling has identified some very high-grade copper. If you move through the next animation, you'll see a number of magnetic features that we've identified and traced. We're now doing soil sampling on the next image. You'll see some soil sampling across to the east, and then a large area of EM that we are flying this year. So in summary, we've got a number of projects. The summer projects are our current focus with Hayden. We've secured the project. We're doing a gravity survey at the moment and drilling at the moment. At Darling Range, we've completed some ground EM. That modelling's been undertaken now and moving towards diamond drilling this month. The Great Southern, we did some more drilling in November, waiting for assays, and then further drilling probably in Q2 of this year. And the Kimberley, while it's currently very wet up there, we've got a lot of exploration planned and large EM survey planned for this year as well. So we've got a lot going on. This start to January has probably been relatively quiet for a lot of people in the exploration game. For us, it's been the opposite. We've really been very, very active, and a very exciting time for us moving forward. So, David, I'll pass the mic back to you. Sorry, David, I can't hear you.
No, sorry about that. That was me. Thanks, Mike, for a great presentation. Clearly, a company that is very systematic with its exploration, a very clear dual strategy with the northern and the southern projects, and a lot has been done, but a lot to be done. How active, like you said, January's been very active, but how active do you suspect the next 12 months will be, and how much work is going to be going into the drill programs across the portfolio?
Yeah, interesting question. Look, we have had, as I think a lot of junior explorers and junior companies have, the infancy of company life is challenging, and we did have a challenge in late 2021 and mid 2022, but now we're really hitting our straps and being far more active. The southern area, because a lot of their projects are under farms. We are limited as to when we can get access to those farms because of we don't want to interfere with the farmers' grain production. So we're really busy after they've harvested and before they put the next year's crop in. So we're very busy in the southern targets now. We'll be drilling. We have drilled in the Great Southern area in November. We will be drilling in the first half of this year down there, drilling at Hyden now. And Gravity now. I think there'll be another drill program there before May. The Darling Range project drilling. Now we've been hampered by land access. Now that has largely been resolved now with agreements with two farmers that will allow us to get access and drill those targets. So that will be happening this month, which is very exciting. And so all lining up really well for us there. So that will be really active. The northern areas are going to be difficult, particularly this year. The Kimberley, with the flooding and the damage that's been done to regional infrastructure up there, or appears to have been done, it hasn't been fully assessed yet, will make access up into the Kimberley far more difficult for us, probably for the first 6 months of this year. Fortunately, we're actually undertaking an airborne survey up there, so we'll actually be able to still undertake those activities, but drilling may be impacted by just our ability to actually get to site. Unfortunately, the bridge at Fitzroy Crossing, for example, has been damaged. That's being assessed now, and whether we can even get through that way, or whether we have to drive up via Northern Territory. It's a long way around, but if that's what we have to do, that's what we will do. But it's a difficult stages right now, but we'll work through that and keep busy with the drill rig, but also other exploration as well.
Shareholders love news flow. Exploration and drilling and other sample activities generate lots of news flow. So there will be lots of news flow coming from Mamba this year. We look forward to following it with interest. Mike, thanks for your time, and we'll speak to you again soon.
Great. Thanks, David, and thanks for all the listeners and FM Financial News Network for the opportunity. Thanks.
Now, changing things up a bit, we're now going to look at a high-quality tech company in DroneShield, ASX code DRO, which has a market cap of in excess of $115 million. DroneShield provides artificial intelligence-based platforms for protection against advanced threats, such as drones and autonomous systems. Joining us today is Oleg Vornik, CEO and MD. Oleg, over to you.
Thank you, David. Oleg Vornik, CEO of DroneShield. We are at an inflection point, having announced a record $11 million order this week, previously followed by another $11 million contract that we released in December. DroneShield is an 8-year-old company making counter-drone products that do detection and defeat of small drones, the likes of you can find in JB Hi-Fi for a couple $1,000, used for such applications like warfare, terrorism, smuggling of contraband, and so forth. We listed about 6 years ago and have been posting record results year on year, but now we're really going through a breakout phase. David, slide, please. And slide. So the first slide talks about why drones present such a threat. As the drone technology continues to rapidly evolve, like any technology, the flying times, navigation capability, payloads, cameras, swarming, along with all the positive applications come nefarious uses. In Ukraine, we're seeing both sides use small drones for scouting out the battlefield, directing artillery strikes, and dropping charges. We've been involved on the Ukrainian side since the start of the war, since the military, via the military aid programs, and are pleased to be making difference, taking down the Russian drones. Intelligence gathering is another big item. So similar how you might use it in war zone, in a more civilian setting, in a corporate scenario, you might have corporate espionage, surveillance, etc. Nuisance, as you might have seen, Gatwick Airport was shut down in December 2018 with a couple drones flying around, stopping all traffic. The reason why all flights need to stop when a drone is detected around airport is if a drone gets ingested by the plane engine, that can burn down the engine and take down the airliner. So today it's a significant threat, and we've been making steady progress in deploying at airports, including our very first US airport in late last year. Cyber and ransom attacks. So cyber gets a lot of publicity these days. Drones can be used for cyber attacks, for example, landing on control decks of ships and using proximity to hack into the controls and demanding ransom, or otherwise the direction be to run the ship onto the ground, for example. Slide, please. 3 streams to our business. The core stream is our counter-drone work, where we are pioneer and the global leader in this rapidly emerging space, both hardware sales and the SaaS subscriptions. So as you buy most of our products, with them come trailing software subscriptions. As new drone types emerge, we issue software updates to the software engines that run on those devices. And while SaaS is a relatively small part of our total revenue, it was approximately 5% in 2021, and we're about to release our 2022 results. We run on December year end. As I think about our next 5-year plan, we hope that close to half of total revenues will be eventually derived via the SaaS. The next adjacent field is artificial intelligence in electronic warfare. So that can be seen as very similar to counter-drone, looking for never seen before signals in the radio frequency space. We are currently doing a $3.8 million contract with the Australian Department of Defence and expecting a follow-up large contract in the near term, as well as similar work in the US. And lastly, we're doing artificial intelligence work in the computer vision, where we just finished an $800,000 contract with the Australian Department of Defence, essentially using a camera to track complex objects using our computer vision technology. And we expect that to lead to another contract, but also we're embedding it in our core counter-drone products. Slide, please. 3 steps to the counter-drone system. First one is detection. It's often very difficult to detect a quiet small drone, especially at night. Our systems are able to provide reliable detection multiple kilometers away, and you can daisy chain the sensors to have very wide area surveillance, such as border. Assessment is usually the next step, where you want to make sure you understand where the drone is, where the pilot is, and we're able to provide that information in real time, as you're seeing on the screenshot in the middle on the top. And then response is then the last step. So sometimes you may want to take the drone down, maybe if you are in a war, for example, and we give save defeat option by smart jamming, where you're disorienting the drone using our jammers, handhelds, vehicle-based or fixed site systems, and then taking the drone down or swarm of drones down without damaging the drones. Or sometimes you may wish to not take the drone down, like for example with our prison customers, and instead we can report in real-time location of the drone pilot and also track and identify who picks up the package and apprehend the participants and conduct investigation and solve the issue. Slide, David. The way we see our company is an AI, artificial intelligence platform for protection against drones. This is because while we do hardware as our core offering, with all of the hardware, of almost all of our hardware, come that SaaS subscription running on AI engine, and that's where the real smarts are. So we develop and market and manufacture both our hardware and software, but the real brains and the real money in the long term is in the software running on our devices. The second item is leverage to the global defense and security sector. The unfortunate truth is that we're living in an increasingly uncertain world. People are realizing that wars are a thing, as underscored by Ukraine and also previously by, I guess, lesser prominence are conflicts like in Armenia, Azerbaijan, and Syria, in the Middle East, and our products and drone threats been prevalent in a lot of those places. And $10 billion counter-drone addressable market is a very large opportunity for a company of our size. Sales pipeline. So as I mentioned, we closed to over 20 million or accepted over $20 million worth of contracts in the last month alone. And we have approximately $200 million qualified pipeline with over 90 projects around the world. In addition to that, we have a couple hundred of additional opportunities through all the work we've been doing in the last few years as a company. We have Australian Department of Defense, US Department of Defense, US Department of Homeland Security, a number of other tier one customers around the world. The reason I say this is, one, it demonstrates the quality of the company and of our products. And secondly, these are not the kind of customers who purchase $1 million worth of products and that's sufficient for them. The idea is you start to iterate into repeat higher value contracts. So as I think about our company evolution, in the beginning, we started 8 years ago with development of our technology, with our team, with our distributor network in about 100 countries around the world. Then we moved to demonstrations, smaller sales, repeat smaller sales, larger $1 or $2 million sales, repeat $1 million plus sales. Then our first maiden $11 million contract in December last year, now repeat 10 million plus contracts that we're sitting at the moment, and 2023 is looking like another record year for us already. And importantly, the last point, most of our revenue is derived by repeat customers, which is quite critical and is a testament to the product as well. Slide, please. I'll skip through the Warrior slide. You guys can read it afterwards. Slide, please. This chart talks about our revenue and cash receipt evolution. So we've been posting record results every year. In December, we released to ASX that we're expecting another record 2022. We're right on the calendar year end. And the results some of the results will be released as part of our 4C at the end of this month. And then the remaining results with our annual report at the end of February. Slide, please. So to recap some of our achievements in the last 12 months, 2 all-time record $11 million orders, recommendation by the US Department of Defense for rollout of our products across the defense bases across the US. So this is very important. It was a very highly contested competition running over about 12 months, where a single agency, part of the US Army, was tasked with identifying a recommended counter-drone solution for deployment across numerous bases in the US. 3 consortia were selected, and we were one of them, and we expect this to be a very meaningful source of revenue starting from this year. First US airport deployment, as I mentioned, and in the US you have over 10,000 airports, so we believe that this would be the first step towards falling dominoes as we do more airports in the US, but also elsewhere globally. And we already have a couple other airports around the world where we're deployed. Deployments at Davos and Ironman, we've done Olympics, SEA Games, Commonwealth Games. To be frank, those high-profile events are not incredible money spinners, but they provide really good publicity and awareness for our customers. Most recently, we've been reported in early January, about a week ago, using our Brazilian's presidential security, using our drone gun system to protect against drones infiltrating the presidential inauguration in Brazil and successfully taking down those drones. So that's really priced as publicity. Numerous $1 million+ deployments with various government customers. Government customers are notoriously difficult to break into. It can take several years, and we're now at the point where all the hard work is done. And the great thing about dealing with those people is because it's so difficult to break in, they're also incredibly sticky, meaning once you have them, so long as you continue meeting their requirements, you more or less have them for life. So we're excited to continue working with those customers to be getting repeat orders. So when I think about repeat revenues in the DroneShield context, it's essentially 2 things. 1, repeat orders with the same customer, and 2, the software service subscription. And then the last highlighted point on this page, in November last year, a couple months ago, we took a $3.7 million investment from Apparis. Epirus is a US defense technology unicorn focused on high-powered microwaves doing hard defeat of drones. So frying electric circuits inside the drone are what's known as hard defeat in the industry. We're very complementary, where we provide detection and jamming known as soft defeat. And then we've been working with them on the US Department of Defense rollout. So that corresponded to approximately a 4% stake in DroneShield at the time, and we're continuing actively to collaborate with Epirus. Slide, please. Slide, please. So geopolitical environment I largely covered, but to maybe put some specific numbers, we are looking at record peacetime budgets in a number of countries, like US DoD passing an $800 billion budget, Germany increasing budget to over 2% of GDP. Germany has been very much a low defense budget nation since World War II, but now with the Russian invasion of Ukraine, this is rapidly changing, and they're investing enormous amount of money to modernize the military. And of course, counter-drone is a very important part of the modern warfare. I heard somebody in defense say that drones and counter-drone today are similar in impact as body armor was in World War I, to give a sense. If you're, for example, in a urban warfare kind of situation and you have your enemy a few buildings down, you can't just throw a grenade over, but you can certainly send a drone over to scout out the situation and potentially drop charge. So with that drone technology, you have a need for counter-drone technology, because you can't simply just discharge a rifle, for example. It's very difficult to detect and defeat drones using conventional technologies, and you need specialized technologies like what DroneShield offers. Slide, please. Slide, please. Thank you. So in addition to the military, there are significant non-defense applications for what we do, such as protection of government facilities. So I mentioned the presidential inauguration in Brazil, for example. Law enforcement, we already supply to a number of law enforcement agencies in Australia, in the US, and around the world. So the application there will be to provide terrorism protection, to be called to sensitive sites, to protect crowd gatherings, and so on. Airports, we covered. Stadiums, so drones can often disrupt games by flying into middle of the field, or even given its big public gatherings, it's a ripe sort of situation for a terrorism attack, or even discharging white powder over the top of the crowd, creating stampede using a drone. So we provide systems that provide protection against such situations. Energy production, so we already started supplying to critical infrastructure, and you guys might have already seen that in Australia there was a bill passed by the Parliament last year requiring critical infrastructure owners to be very careful with making sure that they assess all different types of threats that might be facing their facilities. So if you look at these big cooling stacks in the image, if you are, say, a terrorist or a Greenpeace activist or similar, you might be taking a drone, even without payload, flying it over such cooling stack, dropping it down. You have to shut down the whole power station for potentially weeks, conduct investigation. You have enormous amount of cost, damage, and so on. So nuclear, but also more conventional infrastructure and energy production owners are very mindful of the counter-drone threats. High-profile events, so we've done Olympics, Com Games, etc. in the past, as I mentioned. Not huge money spinner, but great for marketing. And then probably I'll skip through over the next couple, but correctional facilities. So prisons developed very good way of stopping people infiltrating via the ground, but they're essentially defenseless from air. So starting from several years ago, criminals been delivering contraband, think cell phones, escape kits, cigarettes, weapons, right into the inmate cell windows using drones. So it's a very, very significant need for prisons. It's a $10 billion addressable market today across all different types of facilities. Slide, please. And slide. This is the last slide I'll present to. There are a number of other slides in the pack. 3 different families of products that we offer, being dismounted products, the drone guns that you would basically point at a drone, you press the trigger, it sends radio frequency signal which overwhelms the drone safely lands. Our Equitrol is the companion device which enables you to detect such drone first before you take it down. Then the next family is our Drone Sentry X, which is vehicle, ship, or fixed site based combined detection and defeat device. And then lastly, Drone Sentry, the base protection device using different types of sensors like radio frequency, radars, cameras, and then the jammers for the defeat that you would put around a sensitive site to provide a bubble of protection around it. So what's on the left in orange is our hardware, and inside the hardware sits the software like our subscription-based RF engines, the command and control systems, and the DroneOpt ID, which is our camera-focused software. So maybe just to clarify also on the IP, aside from the hardware of the cameras and the radars, which plenty of people do, everything else you see on the slide is 100% created by DroneShield. We have a team of about 40 engineers, 60 people altogether, 15 in Sydney and 10 in the US. And all of the IP belongs to us. We're not relying on any third-party IP. That in turn means that our products are unique, highly differentiated, and we're able to charge very high margins for the products that we sell now in increasing quantities. I'll stop there and take questions, David.
Thanks, Oleg. A great, a really interesting company and very topical, obviously, but more than topical, a very growth-focused and a company that's making great strides across the various sectors in which you operate. A couple of questions, because we're a bit tight for time. A couple of questions. There's a lot of opportunity and the pipeline is massive. How do you scale up to meet that demand?
We have our own production facility in Sydney, as well as 2 outsourced production facilities over the top of that. We spent a lot of time making sure we're scalable through both how we build, meaning we have a number of supply chain partners, so people that do stuff that we do not do ourselves, like CNC machining, metal bending, cable looming. And then when parts that are designed to our specifications arrive to our manufacturing or assembly facilities, putting it together is a relatively simple and very scalable task. And then we also put a lot of effort into our software deployment and make sure that we can deploy at scale. The last thing to say is that our products are not cheap. So the cheapest product we offer is in tens of thousands of dollars. And then the next step up in terms of pricing is in hundreds of thousands. And then our fixed site systems are close to $1 million each. So you're not talking thousands upon thousands of products needing to be made before we're talking very serious revenue.
And last question, competition. When the prize is so big, how competitive is the landscape and what's your competitive advantage?
When we started 8 years ago, there was virtually no competition. Now the market is running red hot. We're seeing competitors emerge in a number of places. We, of course, have an enormous head start by having had a lot of time to develop the products, develop the pipeline, like I was saying, having penetrated those government channels. That takes an enormous amount of time, and then mature the opportunities. Government defense sector is not the kind of sector like consumer where you can just turn up and start selling. It's not that easy to quickly disrupt. So we have a very significant, I guess, head start. Then we're seeing, I guess, a lot of our competitors do what's easier. There might be a single product company focused on single geography. We have made a choice to cover all the different types of counter-drone products: detection, defeat, handhelds, vehicle, fixed site systems. And the last thing to say is that the counter-drone market is becoming really big, meaning I actually personally welcome competition. I think of it a bit like high-end dining, right? You don't mind if there are other high-end restaurants around you. In fact, it promotes the market and increases customer expectations and generally improves the industry. So long as you're in top 3 or top 5, which we certainly are anywhere around the world, there's still more than plenty of business for us.
Thanks, Oleg. An interesting company that has great growth potential, playing in a big market, a big prize, already with strong relationships and contracts in place that will form a great foundation moving forward. So, Oleg, thanks for your time, and clearly DroneShield, a company to watch.
Thank you, David.
Last but certainly not least is exciting exploration company Los Cerros, ASX code LCL, which has a market cap of approximately $28 to $30 million. Presenting today is Managing Director Jason Stirbinskis. Jason, over to you. So we might have a little technical issue. We're just bringing Jason on now. So just give us a second.
How about now? Can you hear me now?
Yep, got you. No problems at all. Thanks, Jason. Over to you.
All right, thank you. Assuming you didn't hear the first bit, I'll say it again, David. A lot has happened since last time we spoke. The most exciting development is by far the acquisition of a portfolio of gold, copper, and nickel targets in Papua New Guinea to supplement or complement our Colombian story. So that'll be the main focus of this presentation. Next slide, please. Next slide, please. So the acquisition of the PNG portfolio is a high impact strategy for us. And hopefully by the end of this slide, it'll all make sense to you as to why we did this. You might on the surface say, well, PNG is very different to Colombia. In fact, it's actually not. In terms of ESG focus and the geology, the nature of the geology, the types of metals we're hunting, and various other bits and pieces. It actually is very similar to what we have in Colombia. Also in terms of where it is and its evolution as well. Historically, PNG has been the focus of tier one type companies chasing elephants, and they focus on a certain model because they're looking for 5 million plus projects all the time. What that focus does is creates opportunities for juniors to come in, and we're here to leverage that opportunity as we see this as a growing area in PNG in the years to come. Just like it was in Colombia 7 years ago when we entered Colombia, it was the realm of tier ones chasing elephants, and that created opportunities for us to move in and discover things like Tesorito and so on. The areas we have in PNG are all close to tier one type discoveries, which is always a good thing. It also plays to our strengths, and this is an important one. The Quinchilla discovery in Colombia is a mature project now. It's 2.6 million ounces, and we're going through sort of early stage engineering and those sorts of things. But our track record of success is in exploration, and we're well funded. So the focus late last year was to find a project that sort of meets or plays to our strengths, and we reviewed many before we found PNG assets owned by a group called Footprint, which were well and truly under the radar for most, but amazing early stage results. It also, we believe, is timed well to money markets and commodity cycles and so on. And it also launches us into the EV battery space. So some really exciting copper and nickel targets to add to our gold story. And the other reason why this was so compelling to us is that we saw in two of the projects the potential for very easy, early, quick wins and dramatic wins at two projects, one called Kusi and another one called Very Very. And to put a number around what I mean by early stage dramatic, that sample you see there, that's taken off of an outcrop. So it's on the surface. And that it's a polished sample. That grade 61.3 grams per tonne gold and 18% copper on the surface. So that gives you an idea of the opportunity for quick wins here. Next slide, please. So that's the distribution of the Colombian PNG assets. The red ones are ours, and you can see they're all sort of proximal to the big discoveries of PNG, and they sit on that major mountain building range that is the Highlands and the Owen Stanley, just like our Colombian story sits on the Andes range. So similar sorts of geology and orogenesis. Next slide, please. So I want to zoom in onto the Ono project because this is getting immediate attention from us. In particular, a target called Kusi, which you can see there in the middle of the Ono project area. It's relatively short distance to Lay, which is the largest airport in PNG, and shares sort of the same sort of geological regional structures as the multi-million ounce Hidden Valley mine and Wafi-Golpu. Next slide, please. This is a plan view of what we have at Kusi. Now, this has been drilled previously, historically, and there's 3 holes I want to draw your attention to, and you'll see the results of these on the next slide. But 4, 7, and 3, sort of the southern side, central in this image, they were drilled chasing the porphyry system that's driving this whole regional complex, and they didn't hit that porphyry. but they certainly got spoke. Lots of pathfinders and similar to say that it was a porphyry somewhere nearby, but they didn't actually intercept that. But what they drilled what they drilled through in their focus on the elephant, finding the porphyry, was this limestone skarn layer, which is really compelling. That 61 I showed you earlier is from this limestone skarn. They drilled through this layer, this sort of sub-horizontal layer, and that's what we're really interested in immediately in terms of a quick win and immediate drilling. The area we're focused on is in that southern image, so where those 3 drill holes are, and you can see 2 trenches there, 20 metres at 3.84 and a larger one, 71 at nearly 5 grams. But that 71 goes along the unit, it doesn't cross the unit, so the length is a bit misleading. It's not true width or anything close to it, but the grades are obviously still perfectly valid. So what those trenches are doing is they're saying, okay, if we drilled through the ridge of this mountain, and if it's a sub-horizontal layer, then it must be exposed somewhere on either side of the mountain. So that's what those trenches were doing. We just walked to the sides of the mountain and said, well, let's see if we can find it, and we found it. But that's just, and that little area down there is really exciting, but it's just a small part of that limestone skarn modelled layer. So that's really exciting, but the potential, this blue layer in this image here, could be enormous. It goes on and on and on to the west, and then bends around the topography, and then should be exposed in the north as well. So whilst we're drilling in this area, and that's exciting enough in its own right, the potential is significant, and we will be exploring that with early